In the recent fall, when Nifty is down by nearly 14% from September, this fund is only down by 5%.
One single fund to rule them all.
His mom asks him to talk to his brother, and the brother would say, Suno sabki, karo multi. This fund has done really well, outperformed Nifty, and with a much lesser risk, which I think is a magic combination.
Who should buy a multi-asset fund?
For someone who's like an absolute beginner and want to start investing somewhere and is not sure where the money should go, that is where he should take these funds.
There is no tax implication at all. It can or has the potential to be missold by saying it could be a stable asset.
Whenever you're judging anything, returns should not be the only indicator that you look into. It should always be risk-adjusted return.
I think quite an eventful week for the Indian markets. A lot of things happening. So if you're looking into IndusInd Bank, for example, the stock fell by more than 25%, and a lot of fun comments flowing around in Twitter that they made a lot of losses in their Nifty call options. I know it's just a joke. And then Infosys falling by quite a lot and dragging Nifty IT down with it. And we also have the Russia-Ukraine war looking like it is going to end after multiple years. A ceasefire has been announced. So a lot of things happening. Nifty is still staying wherever it was staying, I think, last week, right?
Exactly. While US have been cracking down almost 10%, still Nifty staying strong, gives some hope.
People are saying that Nifty is a leading indicator to the global markets. Usually we are a lagging market, right?
Yeah.
Whenever the US falls, we fall. This time, for fun, people are saying that now the US is falling by tracking India.
Yeah.
I think that's where let's wrap up the market section and get into what is the crux of today's discussion. So last week, we put out a video and it was mostly focused on flexi cap investing, flexi cap mutual funds. So we talked about multiple flexi cap funds. We selected or we talked about what is the best one for you to look into or the audience to look into. And a lot of people asked us, hey, what if I don't want such crazy high returns? What if I want to prefer more peace of mind over that higher returns? And that is exactly what we are coming with today. So this mutual fund that we're going to talk about today made a CAGR of 16% since 2013. So Nifty 50 and even Nifty 100 have not performed at that level. They've performed only or given 13% CAGR.
Yeah, so while you're talking about returns, we should even look into the drawdowns aspect. While markets were uncertain and Nifty was cracking down during COVID times, Nifty almost fell by 40%. This funds that we are talking about just fell by 30%. I know just 30 looks, kind of bad, but still compared to Nifty 40% drawdown, this 30% looks okay.
Yeah, speaking about risk and drawdown, I think I can put things better into perspective here. In the recent fall, when Nifty is down by nearly 14% from September, this fund is only down by 5%. So that's the kind of much lesser risk for this fund we are talking about. And even in the last 365 days, we know Nifty hasn't given any returns. Nifty is where it was compared to last 1 year. And this fund is up by 11%.
That's nice, right? So lesser drawdown when market has been challenging and gave decent returns, 11%.
Not decent, right? Much higher returns than Nifty. So you said Nifty 50 in the last, since 2013 has given a CAGR of 12%
to 13%.
near, and this fund has given 16%.
Yeah.
So it is not comparable. I think this fund has done really well, outperformed Nifty, and with a much lesser risk, which I think is a magic combination that investors are looking for.
And even in the recent times, the 5% fall that you're saying, when we compared it with flexi cap, we said it was 7%, 8%. Parag Parikh, the best performing flexi cap. This is just down by 5%.
Yes. So I think the trigger from the comment section is the fact that when they heard about Parag Parikh flexi cap, I think a lot of people are thinking about, hey, let me reduce the number of funds in my portfolio and let me maybe have only one fund, which is maybe one size fits all sort of a thing. And that is where some people are thinking, okay, Parag Parikh flexi cap funds or flexi cap as a category is taking more risk, right? They could be investing a lot in the small cap, mid caps and all. So that is where the question is coming. Hey, do we have a less risk taking with considerable returns, a one size fits all sort of a mutual fund? And I think that is the answer we are giving today.
One single fund to rule them all. Just like a Swiss Army knife, which has multiple tools inside it, which can take care of most of your needs. This is one fund which can take care of or could take care of all your investment needs. That's what we'll be discussing here in depth today. So welcoming all the audience of the show to the 17th episode of the Aftermarket Podcast. My name is Ajay Ajit. This is Nihal Bandapalli.
Hi.
And this is Sharik Shamsin, CEO and co-founder of MarketFeed.
Hi.
And also, this is where I want to talk about MarketFeed's automated trading strategies, which had another amazing week this time. So, making nearly 1% profits. Again, not an easy week. The market falling by quite a lot, then reversing. So, even in between all of this, I think the strategy has performed really well. 1% solid week. I think, or we are all hoping for a strong end to the financial year here. So if you have already not filled up the form, please go check out the description and the pinned comment where you can find out everything you need to understand about what is MarketFeed's automated trading service. Fill the form if you're interested so that you can be part of the exclusive webinar where we'll be talking about the same.
So I know by now everybody would be curious to understand or to know what are we talking about and what is that fund. So let me break that silence. The fund name is ICICI Prudential's multi-asset fund.
Yeah, and because of that, because it's a multi-asset fund, I think today's discussion should all be around what are these multi-asset funds, what are the rules and logics of these, and which are the multiple multi-asset funds available out there. You already mentioned the numbers we quoted are of ICICI Prudential's multi-asset fund, great fund in itself. But then are there other multi-asset funds which are better? How should someone look at a multi-asset fund as part of their portfolio? Is this, like Ajay said, is this a Swiss Army knife? Is this the only fund someone should have in their portfolio? All of those discussions is what I think we should have today.
And to begin with, first let us break down what is this multi-asset funds are even.
Right. So before getting into the theoretical definition, I really want to talk about this very famous TV ad that ICICI Prudential AMC runs, right? So I'm sure a lot of us would have seen it already. And I remember seeing it a lot during IPL as well.
Last year's IPL.
Yeah. So there is this guy out of college getting the first job. And now he has some money to invest into mutual funds and he does not know what mutual funds to invest in. And he goes around talking to everyone asking, hey, where should I invest my money? And then there is some uncle telling that, hey, you put money into equity because equity gives a lot of opportunity for growth.
Yeah.
Then he talks to someone else and will give an advice saying that, hey, invest only into gold because gold will give some stability along with growth.
Yeah.
Then he'll talk to someone else and that person would tell, invest only into debt because debt is what is really, really stable. Then finally, his mom asks him to talk to his brother, I think, in the ad, and the brother would say, Suno sabki karo multi.
Yeah.
It's like here everyone and do multi.
Yeah.
And because all the advices he's getting is invest into equity, gold and debt. And that's the classic advice. For a good portfolio, you need to invest into all these asset classes. And that is where ICICI is presenting multi-asset fund. Now let's forget ICICI from the picture because, hey, no one's paying us money to tell this, right? So talking about multi-asset funds here. So from this ad and this story, what do we understand? It is a single fund which will give you exposure into all these three asset classes. You don't have to go and individually invest into just a gold mutual fund, just an equity mutual fund, just a debt mutual fund. This is single one mutual fund which will take care of asset allocation or asset class mix as per the market condition. And I think that is how I would love to start the definition of multi-asset funds.
Yeah, and I think it will be an iconic ad campaign. So if you're looking at the Suno Sabki Karo Multi, years later we'll look at it and say, hey, that was an amazing ad campaign. And for that very reason itself, the multi-asset fund category has exponentially grown over last year, right? Huge funds, huge AUMs flowing into the category, and maybe rightly so, especially because most people who come into the market and start a mutual fund SIP, let's be real, they don't have much idea where to invest. So a category like this might be very, very lucrative for them.
I think this is great. We brought in a story. We discussed about the ad and how multi-asset as a category is growing. But for the sake of it, let's maybe break it down into the actual theoretical definition of what a multi-asset fund is.
Yeah. So just like how we talked about FlexiCap last time, let's define or talk about the rules that SEBI has set. So SEBI rule says that this fund needs to invest into at least three categories. Which are they? Equity, debt, and commodities, that is gold or silver. And into each of these three categories, at least 10% should go. There is no particular upper limit being mentioned, but at least 10% should go into equity, debt and gold or silver at any time in their mutual fund existence.
Yeah, and for instance, the equity exposure can go from 10% to even 80% because the rest 20% can be put into different
Should
segments.
be, right?
Yeah.
Should be. So SEBI says should be 10% minimum should go into each of these categories at any point of time, and that is a literal definition of what a multi-asset fund is.
And the fund manager has all the abilities or the flexibility to invest, and how much allocation should be given to each different categories.
Yeah, and exactly for that reason, there is no one particular benchmark that you can track for a multi-asset funds, because each multi-asset fund will have a different fund manager,
Yeah.
will have a different investment philosophy.
Yeah.
So you can't, just like how you compare maybe a large cap mutual fund A to a large cap mutual fund B, you can't do the same with a multi-asset fund. They'll have completely different investment philosophies. So we have to understand that.
Yeah, and maybe that is where we have to even go into what are the funds that are available and what have been their returns in the past.
So I think what we are bringing out is the fact that multi-asset fund is nothing but it's like getting your own personal portfolio manager of sorts, who has all the liberty to invest into equity, gold, or debt, or other commodities like silver, or even other stuff, depending on what his conviction is,
Yep.
depending on what the portfolio manager's thought and understanding of the market is. So it's like giving money to that person and asking him to, hey, take care of my money, invest into wherever you think is right, which obviously overlooked by SEBI. And I think that is what multi-asset funds are, and that makes it beautiful for sure.
Yeah, exactly. And that is the major benefit when we talk about multi-asset funds. This is like the biggest pro I would feel is like there is no nonsense, no noise. It is just one single portfolio, one single asset in your portfolio, which has been taken care of all your investments and diversification. Like how Ajay was mentioning about the Swiss Army knife. You know, one thing in one small compact form and your everything is sorted.
And one more major benefit that a lot of people don't think about is a taxation benefit. So let's say in different market conditions, you're managing your portfolio intelligently, decreasing your equity exposure when the market is falling, or increasing your gold exposure. When you take all of those actions, you have a tax component to it.
Yeah.
So you're booking some profits, then you have to pay tax on those profits, long-term capital gains, short-term capital gains, anything, right? But in the case of a multi-asset mutual fund, there is no such long-term tax implication. There is no tax implication at all.
Yeah.
You see it as one single fund. From the date you buy it, if it is more than 1 year, you just have to pay the 12.5% LTCG tax.
Yeah.
It's as simple as that. At every rebalance, you don't have to pay any tax to the government.
True. I know everything is sounding great, investing into multi-assets. There is one portfolio that fits for all. Everything is sounding great, but I am sure there are some negatives also, or some things that we actually have to worry about when investing into these ones. I think we have to put some light on that aspect as well.
Yeah, the first or the major con, I would say, is a bit unfortunate because it has a potential to be very easily missold to a lot of people.
Very true.
So because of its nature, it having gold in its investment philosophy, it having debt in its investment philosophy, even in that ad, right? Suno sabki karo multi.
Yeah.
There is that inherent thought that, hey, it is as stable as gold investing.
True.
But not necessarily. At some point of the investment journey, the fund manager might only be holding 10% gold.
Yeah.
Right? The rest 80% equity that he is holding can become very volatile. So it can or has the potential to be missold by saying it could be a stable asset.
Yeah, exactly. And this doesn't even account for your personal needs or your personal financial goals, right? So maybe I'm a youngster. Probably I need a certain percent of allocation into gold or certain percentage of allocation into equity very specifically because I have my risk appetite or maybe my financial goals are aligned in that way. And in this particular fund, everything is in control of the fund manager and it is purely at his discretion where my money is going.
What we said as an advantage, again, just to be very clear, it can be a disadvantage in the sense that it is not tailor-made.
Yeah.
And it can be missold as tailor-made. Otherwise, it's okay, right? It's an advantage itself. I agree with our earlier points here. But if it is being missold as, hey, this is tailor-made for you, it is not right. It's a large mutual fund with more than 50,000 crores in AUM, which is going to cater to a large section of the society. It is not going to understand your personal needs and move equity, debt, gold exposure according to your age or your understanding of the markets. It won't do that. So let's discuss who should buy a multi-asset fund.
Yeah, so understanding all of these things, the only conclusion that I can come with up is for someone who's like an absolute beginner, who's getting his first salary, like how Sharik said, and want to start investing somewhere and is not sure where the money should go, how much allocation. He's still confused with so much of data and so many narratives around him. That is where he should pick these fund to start with, and then in the later parts of his life, where he knows and understands what and where his financial goals are heading, probably he can explore other mutual funds and other different assets as well. So now that we have set context on what are multi-asset funds, who is it good for, what are the pros and cons, how do they function, so maybe we should even tell what are the best multi-asset funds available right now and what have been their returns and drawdowns.
So in the recent years, there are many multi-asset funds which have come up, but let's not focus on them in the beginning. Maybe we can talk about them later. But in the beginning, I'd love to talk about these three multi-asset funds which have been there since a very long time. So these are from the houses of SBI, HDFC and ICICI, as we have been speaking, right? So all these three AMCs have their very famous, very large multi-asset funds which have been live since 2013. So we have good enough data to compare all these three. So if you look here, ICICI, from a returns perspective, ICICI from 2013 has given a CAGR of over 16%. And compared to that, HDFC and SBI have given a CAGR of nearly 12% only. So clearly on the return side, ICICI is a major winner. Now let's talk about drawdowns. Every time I say this, whenever you're judging anything, returns should not be the only indicator that you look into. It should always be risk-adjusted returns.
Yeah, and especially for multi-asset funds, where we said that each fund has its own investment psychology. I think this is more important than ever. And since there is no real benchmark also, right? So we can only compare these funds against each other. That's what we have to do. And we have to do that very properly.
Absolutely. So speaking about drawdowns, I think from 2013, if you see the largest drawdown is during the COVID time period. So during that time, the ICICI fund had a maximum drawdown of nearly 30%, while the HDFC fund had nearly 26%, while the SBI fund only fell by 15%.
Yeah, so just from your returns and drawdown numbers here, what I understand is ICICI is going for a higher risk, higher return investment philosophy, whereas SBI is trying to play a safer game, trying to go for slightly lesser returns with slightly lesser risk there, and HDFC is nowhere, right? It's neither at this level or the other level. So
I also don't understand what's happening with HDFC's multi-asset fund. It has returns like that of SBI's multi-asset fund, which is on a lower level, and it has risk as high as ICICI's multi-asset fund. So HDFC is not really fitting well into the scene here.
And this has the major pain point what Ajay was mentioning earlier, that these fund managers have their flexibility to invest and allocate funds wherever they need, and that is where ICICI is majorly focusing on equity funds. So when markets are falling or markets crack down, these funds tend to perform really bad when compared to the peers.
Yeah, that makes sense.
Yeah, and Sharik was mentioning about newer funds getting listed and new NFOs coming into the market, and that is where I have to mention about Quant coming in. Just like in flexi cap funds, Quant was the outlier giving 30% CAGR. Similar case again here, we have Quant multi-asset fund, which is again giving 30% nearly CAGR, and this is relatively a newer fund, so we don't have 10 years data, but the 5-year CAGR looks at 30%, while ICICI's 5-year CAGR is looking at near 24-25%.
No, I get the point again, but that's where I'll again bring up risk as a factor. So we spoke in the beginning, ICICI's multi-asset fund, though even in the last 5 years, yes, it has given 24% CAGR, but in the recent fall from September, ICICI's multi-asset fund only fell by 5%, while the Quant's multi-asset fund that you're talking about, it fell by nearly 14%.
Yeah.
So again, I think what is coming out is the fact that among all these funds, ICICI's multi-asset fund, like they're advertising a lot, their numbers are also looking good as something that we can clearly see here.
And even if you look into the AUM that this company ICICI has, is the highest among the whole category. While all the multi-asset funds are near 4,000-5,000 crores of AUM, ICICI is at 50,000 crore AUM.
Beautiful. And now I think over the last many videos, whenever we are talking about best mutual funds to invest in, whatever category, in whatever context we are talking about, we have been talking a lot about strategy index funds or strategy indices and strategy index funds to invest into them. So one very important point which I want to bring out here is the fact that NSE has not created a strategy index for a multi-asset sort of an investing philosophy. So I would love to see going ahead NSE coming out with a rule-based strategy index which will facilitate us to invest into, again, rule-based multi-asset index of sorts. So I'm looking forward to that.
NSE or BSE for that matter.
Absolutely.
As a BSE shareholder, I would appreciate if BSE actually brings it up. But on a serious note, there are such strategy indices in the US, right? So it's not even a crazy idea to pitch such a multi-asset allocation strategy index in India. I think it can be implemented if they have the intent.
Correct, true. And all the index funds, because they are rule driven, there is no expertise of the fund manager to bring in. Probably that will be at a lower expense ratio as well when compared to these funds. I'm sure they have nearly around 0.6, 0.8% expense ratios. Maybe if there are strategic funds that are coming in, they'll come at a much lower expense ratios, which would be great for investors.
Yeah, so I know we have discussed the pros and cons, but I want to highlight a few more things that you need to note as a investor here. So the first one is that the current or the recent gold rally might skew the numbers a bit.
True.
Let's be real, it could skew the numbers a bit, especially if you're looking at a shorter time frame. Right? Gold has outperformed every other asset in the last 1.5, 2 years, and there is going to be a real impact on that in the CAGR numbers.
And that's where I would love to strongly remind again of the fact that when it comes to investing, which is for someone's own life and life's aspirations and goals and wealth building, which is a highly subjective matter in itself, I think there cannot be one size fits all sort of a thing. I know it attracts a lot. Even there is some trigger coming from one size fits all sort of an investment for this video or for this discussion as well, but I don't think there is any merit to that.
And exactly, and just like how I was telling about the con earlier, that maybe one size doesn't fit all. You have to understand what your financial goals are. How are you planning to allocate your funds and all. Maybe this fund is good for a newbie, for a beginner who doesn't know where to invest what. Maybe this fund is great for that person, but the more you grow, the more you want to explore other investment opportunities. That is where you have to look at different options as well.
So everyone has to understand that there is no perfect one size fits all or no perfect Swiss Army knife, but this comes close.
Yeah.
Especially for beginners.
True.
So to summarize, the point I get here is the fact that beginners who do not clearly have goals to invest for, they, without getting into analysis paralysis and getting overburdened by all the information about mutual funds and the categories and all of those, if they want to keep things very, very simple, they can go and invest their money into multi-asset funds.
Yeah.
Done, dusted, simple. But now if you are someone who is getting active about investing, serious about investing, you really want to invest your money so that it can make a meaningful impact in your life, which means that you're investing for your personal life goals, you're investing for your retirement, you're investing for other smaller goals in your life, then it is not child's play. Then I want, in any sense, I wouldn't say recommend investing just into one fund and just keep waiting till it happens. We've been talking about this, right? What if you invest into, say, even for this fund for that matter, and say your life's goals, or you wanted to retire in 2020 end.
2020 March.
2020
Yeah.
March or end for that matter.
Yeah.
And you have been investing into this multi-asset fund right from 2010. You've been investing for all 10 years with a lot of discipline. Only this one size fits all with that sort of a mentality. And what happens in 2020? It falls by what?
30%.
30%. And hey, your retirement dreams are now shattered. So
Yeah.
you shouldn't do that. So for anyone who is getting serious about investing and really want an outcome from investing which has a very strong influence on your life, then you have to be serious about investing. You cannot get into this nonsense of, hey, let me invest into just one fund and it'll take care of me. That is where you have to go into intelligent asset mix, which is tailored for who you are,
Yeah.
where your goals are. If your goal is just 1-2 years away, you should have a lot of debt. Even if the market is not demanding that, but your portfolio is demanding that. So you should get into do it yourself, or you should get an actual financial advisor or a tool which can help you. I think that is what it is.
Absolute value, I would say. And if people are asking, hey, how do I even decide that when to invest to where depending on my goals, I'll link a video here which has a detailed Excel sheet. You can take it as a reference. Don't take it as investment advice. Take it as a reference to understand for short-term goals, how much allocation you should be giving into debt. For long-term goals, how much you still should have gold in your portfolio maybe. So all those will be covered in that Excel sheet, so you can check that out. I think that's where let's wrap up today's show. Again, a 17th episode wrapping up. I think a lot of value. So thank you all for joining in. As always, make sure you let us know any and all of your thoughts in the comment section down below, because you are the fourth participant here in the show, and we would love to read all of your comments and to improve upon it.
Thank you all for joining us in this wonderful conversation and insightful conversation, I believe. So that is where I'd like to sign off myself, Nihal Bandapalli. Bye-bye.
Bye.
Bye.